We're going to stick with energy as a topic. The price of natural gas has dropped 33% this year, making it the worst performing commodity thus far in 2009. Some analysts, however, see a rally coming. Among them, Ralph Preston, senior market analyst at Heritage West. He joins us from San Diego. Ralph, I was looking over some notes that we prepared for my discussion with you, and it's not that often that you see the words epic rally. This is what you're predicting for natural gas. Obviously, timing is what everybody wants to know. What's your view?
Yes, when it comes down to the timing, I believe that there's two specific price points that have given traders and investors a sense of place to gauge entry points on. We had an incredible collapse in the market. I think this market especially is a great example of how markets can reflect economic strength or weakness, as witnessed by that 10-month decline that we saw in prices, nearly tracking in lockstep the negative economic information that investors have been handed from July to the present. April 30th, we hit a low of $3.39 a BTU at the end of April. Then heading into May, we saw the market rally, bounce higher, consolidate those losses. In mid-May, we touched $4.69 a BTU. Prices slipped back down, went and challenged that low that we put in place at the end of April, touching $3.50, calling what technicians see as a double bottom. So when it comes to the timing here, Eric, we're going to look for a push over on a weekly basis above $4.69. I think that's going to be the cue for many technical traders to begin establishing fresh new long positions, setting the stage for a move to about $6 a BTU in the price of natural gas here.
How much does it matter to you anyway, the relationship between natural gas prices and oil prices, something that we've been looking at over the past, at least the past week, as it really gapped out there?
I think when it comes to the energy sector, we're going to see one market play off of the other. So any kind of bullish sentiment that is in the crude oil market is going to definitely spill over and affect the price of natural gas as well, I believe.
Why the lag?
The lag is a part of market psychology, two different animals, and I believe that one's going to react differently to a given idea.
Now, you were talking about the technical traders. Let's talk a bit about the fundamentals. Demand for natural gas, obviously not so great during the summer months, but we do have signs that the economy is really turning around. How much of that is going to play into natural gas trading?
I think any kind of positive economic information, government reports that are released heading into the future is definitely going to add a lift to the bulls here. Any kind of perceptions that the economies begin to strengthen and move out of this recession is going to clearly be supportive of natural gas. As we witnessed on Friday's better than expected non-farm payrolls, we saw traders astonished at the economy. The jobs report was better than expected, and we saw the price of natural gas rise. And I believe that any other further reports later on down the road that are better than expected, any positive information that we're handed about the economy is going to play into the bull camp here.
Ralph, very quickly, we've only got about 20 seconds left. Andy, before you just mentioned the decline in the rig count, 44% this recession. How important is that to you?
Oh, you know what? This is going to be a classic example, a vicious cycle here that we're seeing as we see producers begin to pull rigs from exploration. It's going to set the stage as we see supplies taken off the market. It's going to set the stage for higher prices later on down the road.
All right, Ralph Preston, senior market analyst at Heritage West. We were talking natural gas.